Hey, it's Ryan Andrews here at the Hiatus Homes World Headquarters. Pulling a graveyard shift tonight to get a new economic update out on some of the new data that was just released in Bend on the Bend housing market. A couple of interesting fluctuations, and then I'm going to kind of broaden things out and look at some of the changes in the national housing market with lumber prices and costs and home prices. So join me and let's go through it. Okay, so here we go. I'm going to start with the information out of the Beacon report. That's a report that's released by a local appraisal group on Bend, Oregon. Just provides some great data. We'll provide the link below if you want to access that report yourself. So just kind of kicking things off, the median home price here updated was basically flat the last 3 months. You see it popped up a little bit last month. I talked about that. I think that was attributed to the cash buyers coming in. We'll get into cash buyers in just a second, but basically the last 3 months median home price has been flat. So decent news. As a home builder, there's a little bit of support there. As far as number of sales, way down this month. You can see that popped down to 98. That was down from 137 last month. Now, in all fairness, December, January, February tend to be the lowest month in transaction volume, so it's a very cyclical. This month, the cyclicality of it just dipped lower than it had the last 3 winters. And so, something to talk about or something to look at there. As far as days on market, that's hovering around 30, same as it was 2 months ago. Last month, that number popped down a little bit. I think that was, again, because of the cash buyers. Big story right here, building permits are way down to 16. That's off of highs that were around 90 the last couple of years in various months. Again, that's very cyclical, but think about it this way. The high season is the summer. It takes 4 to 6 or more months to build a home, especially right now. And so builders that want to be ready for the selling season, the high demand selling season, need to be starting their inventory right now. So the fact that there were only 16 building permits issued in December, only 16 starts, that's extremely low. That's the lowest number we've seen in all 3 years of the chart here. And I think that means we might end up with an inventory crunch next summer if the Fed does indeed perhaps pivot. We can talk more about that in another video. Then that might mean housing is kind of picking up steam this summer and there's not a lot of inventory. As a builder, what that means to me, so we've got about 4 months to build our homes on lots 3 and 4 at Roosevelt. So we're sitting there trying to decide, well, if we want those ready for summer, we've got to start those basically by March and be ready to go so that those are ready midsummer. So we've got about 60 days to make that decision and kind of see what happens in the market here. As of right now, I'd like to start building those homes. But we're about to list lot 1 on Roosevelt, and so we'll see how the interest looks on that first home in the next couple of weeks. Okay, another kind of big story this month is the conventional and cash transactions. You can see on the far right of the chart, conventional transactions stayed about flat from last month, having come way down off the highs the last 2 years. Last month they're at 72, this month they're at 67, so about flat. We'll talk about mortgage rates in a minute, but mortgage rates have also been flat. So I think that's kind of a nod to that. Little stability there, which is a good sign. Cash buyers, on the other hand, fell off a cliff. That's a little bit of a surprise to me because last month that number had popped up from being in the kind of 30s and the 40s for a couple of months up to 55 transactions. So I was saying last month that the cash buyers came in and lended some support to the median home price. Closing those transactions. However, this month there were only 26 cash buyers, so that dropped down quite a bit. That could be because of holidays and all. Again, cash buyers are cyclical with December. You can see that's the lowest cash buyer month of the last couple of years. So who knows? Let's keep watching that trend. Month supply, still about 1.5 months supply, so we're still in a seller's market, although that's changing rapidly. And median sales price per square foot. So much strata in that's not a super relevant number. Okay, so that's kind of all I'm going to cover on that. I want to jump into an article real quick that I found interesting, came out last month, published by a finance blog called Hedge. is a great spot to find alternative finance news. They're very contrarian, a lot of interesting articles, a lot of crazy articles. Anyhow, this had a pretty interesting headline. Lumber prices collapse as homebuilder sentiment falters. So homebuilder sentiment is, you can kind of see that. This is just another interpretation at a national level of what I was saying with the 16 building permits in Bend, Oregon. Same thing is basically happening on a national level. That's the point here. Home builder sentiment is, basically in a wait and see mode. And so very few building permits are being pulled right now and issued. So housing, so that's kind of our second start here. Housing starts are way down. Housing starts and building permits are way down. These are November numbers. So this was published in late December. So, what we're seeing in Bend, Oregon, same thing we're seeing on a national level. That's really the parallel that I'm drawing here. Okay, let's get into lumber prices and costs. We've seen a massive increase in home price, building and construction and subcontractor and trade costs and materials. Lumber's been a huge driver of that. So lumber prices collapse is the headline here. Have they? Well, they've come down quite a bit in the last year. So a year ago, I'm going to pull another chart over here that just makes it a little easier to see. Okay, this is the last 5 years of lumber prices. So let's talk about lumber. Lumber is priced as a commodity per 1,000 board feet of lumber. And so this is the price per 1,000 board feet of lumber. Is at $368 here. Was the close today. You can see earlier in the year, early in 2022, in February, it was peaking at $1,200, $1,300. In late 2021, peaked at almost $1,500. So that's come down, by 2/3, almost 73%, I think actually. And so huge costs, big, obviously lumber packages are not the only supplies that go into a home, but they're a big piece of it. Let me give you an example, kind of two examples. Well, let me go three examples. Number one, when we were building Roanoke, the last 5 homes on the bottom there, we were building during this escalation in lumber prices. Our framing package doubled in price between the first and the last home. Just, extraordinary cost escalation. Luckily the market was remaining really strong right then and interest rates were still low. So the market kind of bailed out the profitability of the project. That project ended up being unbelievable, essentially generating 29% yields. And so, still an extraordinary project, but costs were skyrocketing at the time was the point. Now, when we came to bid out Roosevelt over here, lots 1 and 2 on Roosevelt initially, that was kind of late last spring. So lumber prices had just come off the high and we're starting to hear, a little noise. Lumber prices might be coming down. As an example, so we got that bid. That home is now built. When we went and bid lot 2, which was a couple of months, so that lot 2 started in October, lot 1 started in May, so about 6 months, 5 months between those two. Cost came down almost $80,000, and a lot of that was due to lumber. And so, just seeing these huge fluctuations in cost, very hard as a builder. We don't have a lot of purchasing power because we're not doing hundreds and hundreds of homes. So very hard to maintain margin and control costs, but we're doing our best. We're watching this really closely. And this is certainly some good news. Okay, third example, Penn apartment building. When we initially got that building bid, was at the end of last year, so a year ago. That was bid on an early set of plans. And the lumber budget was something around $1 million for the framing. And that was bid out at almost at the height of this market. And so costs have come off quite a bit of that. I did a little back of the envelope math, and I think costs on Penn, due to just a change in lumber price alone, might come down about $360,000. So we'll see. We have RFPs out to 3 builders that are bidding that project right now. Just kind of sharing some cool on the ground anecdotes. Okay. Back to interest rates. Okay, here we go. Interest rates, like I said, have basically stabilized, and that's why I believe we saw conventional loans were basically flat over the last month. So here's how to interpret this data here. You can kind of see the national average on this. It's just from bankrate.com. Okay, so at the height of the Federal Reserve's kind of big hikes, 1% hikes and all, and they were talking with very tough language. We're just going to keep hiking. The mortgage market likely overcompensated because they were expecting this. And mortgage rates went up. We can see they peaked here at about 7.25, 7.24. That was in mid-November. After that, the CPI numbers came down a little bit. Housing prices certainly came down a little bit. And so this has now come down, about 75 basis points to 6.5 and has been static. Even though the Fed did another hike in December, mortgage rates stayed static. That tells me mortgage rates had already baked in this Fed interest rate raise. I think mortgage rates have baked in the next federal interest rate hike as well. So as long as the Fed kind of does what they say, what they're currently messaging, I think we'll see mortgage rates stabilize, which will kind of bring a little momentum into the summer. Okay, let's look at this. Okay, U.S. housing starts. Oh, this is just kind of another way to look at that data. I want to explain this chart because I think it's kind of interesting. Okay, we're currently in this last month. This was November because, again, this data is on a lag. At 1.42 million housing starts. That was a November number that gets annualized and seasonally adjusted a little bit. So that's that pace of 1.42 million a year. That's down from May of 2022 at 1.8 million a year. So that's a huge drop off. Not quite, it's probably about 20%. I guess that's about 4 million, not quite 4 million pace off of 1.8 million. So kind of see the national average. So again, what this speaks to, nothing has changed in the demographics of the United States. It's not like a bunch of people stopped needing housing. However, builders are sending a lot less units to market. So, just kind of the national piece. This is another way to look at it. Building permits month over month is down, way down. So again, all this is nodding to housing shortage in the future. And then kind of last chart I wanted to share, zooming out to a national level, U.S. single family houses sold. This is down off quite a bit off peaks. 840,000 was the annualized rate. Now it's down to 640. Kind of in the midst of the pandemic in 2020, it was up over 1 million annualized pace. So I'm gonna on our blog, I'm gonna post links to these charts and screenshots to these charts. So click that link below. And now I kind of want to just transition real quick to what we're thinking as a builder. Number one, we're highly focused on costs. Profitability, we can't control right now what we sell a home for, and that's fluctuating based on interest rates and the market. So we can't control that, but we can control our costs. And so we're trying to work really hard to control our costs and be efficient. We see this housing shortage coming, we think in summer, or getting exacerbated at least. And so as a builder, I would love to be delivering homes into kind of a summer, stronger demand in the summer. However, really important not to get overextended. We do have loans in place in order to fund our next 5 builds, the 2 we have under construction, and our next 5 builds. All that debt is in place. It's locked in. We've got 2 years to use it. However, I don't want to get overextended with fully built spec homes that we can't sell and are all of a sudden carrying these at debt service. And so I think like a lot of builders, we're just being measured and slow. We want to keep moving, but we're going to drip those out on the market and see how our progress goes. So that's our strategy. That's how we're looking at things. The next project to get capitalized is the Penn apartment building. That project still looks good to us. I think, note on rents, the nationally rents are up over 24% since 2019. So over the last 3 years, it's kind of 8% a year or more. So we think that's going to increase, especially if there's less housing coming on the market at the national level and in Bend, Oregon. That's going to create more demand for rentals and housing. Now, right now, there's a lot of rentals out on the market. Did that interview with local real estate agent and friend and investor in our fund, Andrew Lawrence. A couple weeks ago, we talked through all these rental homes that are on the market right now. So right now, it kind of looks like the rental market's weakening. I don't see that as a long-term trend. I think there's going to be demand for rentals going forward. And one of the biggest things to note is one bedroom saw the most demand in the local rental market, and we're basically trying to build an apartment building that's all one bedrooms. It's these kind of open one bedroom studio concept, beautiful. You can check out some of our renderings on our website, hiatushomes.com. So point being, still a profitable project. We're trying to move forward with that. We're working with the city on some special tax incentives and getting that program off the ground, trying to qualify for that. So if everything comes together, we will be hopefully breaking ground late spring, early summer. We can pause on that project if anything changes at any time. Okay, thanks for listening. I'll stop here. If you have any questions, want to talk economics, the national level, Bend level, with me or Jesse, you want to come by and see any of our Hiatus homes, or you're interested in buying one of these homes, they'll be listed in just a couple of weeks. And so check us out at hiatushomes.com or shoot me an email, Ryan@hiatushomes.com. Okay, take care.